Today, we'll be looking at position size calculator, how to calculate our position sizes. It's all about risk management. That is number one thing any trader must master. It's not being smart that makes a trader money. It's being smart enough to know that the market is smarter. Many a times we see traders who think they are very good because they have a profitable week and they think that the market is their father's market. After a while, you see them losing everything they have made. Get it? Losing everything you have made in 1 month, losing it in one trade. So that is why I say that it's being smart enough to know that the market is smarter. That is actually the true smartness of a trader. So what am I trying to say? So you must learn to risk what you know your heart can carry. And one of the ways to do that is to know what you are risking. Yes, you have a $100 account, you are risking $5, which is very nice because if you lose that trade, you have $95 left in your account to enter other trade. It's not the profit that is the most important thing. Is capital protection. That is the most important thing in trading. You need to protect your capital so that you have more money, more fund to enter other trade. So it is very, very foolish or unprofessional to enter all your equity in one trade. It is very, very wrong. When they say don't put all your eggs in one basket, you can also apply it in Forex. Don't put all your money in one trade. Don't put all your money in one trade. Good. So how can I manage my risk? How can I know what I'm losing so that I don't have to lose too much? Now, this is how you can do that briefly. Now, for example, this is Euro USD. We want to enter our position, want to enter a position at this point. This is our entry. This is our entry. And this is our where we want to put our stop loss at this point. And these are targets. Though the main focus of this training is not the target, it's just the stop. Now, we want to enter this trade. This is our stop loss. Now, how do we know the amount we are risking on this trade? How do we know the amount we are risking on this trade before we even enter the trade? That's the main aim of this tutorial. How do we know? Now, this is how you know. You go to babypips.com. There are a lot of platforms you can use to actually calculate this, but I use babypips. That's what I've been using, so I recommend it to you also. If you log into babypips.com, you go to tools. Tools. Under that tools, you will see Forex market hour, risk on, risk off. But what you will click is position size calculator. You click on it, it will take you to this page. Now you scroll down. This is where you input all your data. Now, account currency, what does it mean? Which currency do you have in your account? Is it USD? Is it Euro? Is it JPY? Is it pounds? Which currency? Okay. For this purpose of this video, let's use USD. Let's say my account is USD. Then what is your account balance? Let's say your account balance is $100. That is your account. And you have made up your mind that you want to risk 5% in every trade. 5% in every trade. So this next boss is to impute the percentage you want to risk. Now, the next one is stop loss pips. Stop loss pips. If you go back to your pair, if you check, you see 42.5. Check the red side of the position, the short position. If you check the red side, check down, you see 42.5. 42.5. 42.5. You can see it. That is the risk. That is the risk. That is that is what the pips we are risking. Okay, now you go back to give me a minute. Okay, now 42.5. You go back to your calculator, you put 42.5. Okay, now you click on calculate. Now, if you notice in this pair, they are not asking you the current price of the market, but in other pair, you will be asked the current price of the market. So we're going to do one more so that you understand what I'm saying. Now, if you check, currency pair is the last year, but the next pair we'll do, it will not be the last, there will be something else. Now let's check now our standard lot is 0.118, which is, let's just say 0.0118. So you take, so your lot size is 0.1. I normally take the first to 0.01. 0.01 is the lot size you will use in your metaphor on this trade to risk $5 on this trade. If you enter anything more than 0.1, you might be risking more than $5. So 0.1 should be, and in your metaphor, your stop should be at this point. Your stop should be at this point, which is 1.08368. You can see that. So your stop should be at this exact point in your metaphor. If you take it higher, you are risking more. You get it? You are risking more. So it must be at this point. Your entry should be at this point. And once the trade is run, you will just be losing just $5 if the market goes against you. Okay? Let's do USD card. Let's do USD card. I just want to show us something so that we can note, so that we don't get confused when we come across it in our own trying to do the calculation ourselves. Okay, let's say this is, we're entering here. Let's say these are targets, these are targets, these are entry, these are stop. For instance, this might not be the logical, the best place for entry, but for the purpose of learning, just understand what I'm trying to communicate. Okay, let's say these are entry, these are target. Now, if you check, our pips is 30, our stop loss pips is 30.5. So we are using Euro USD. So USD card, that is our pair. USD card, account balance 100, account balance 100. We're risking 5% of $100. Then our pips is 30.5. 30.5. Now, if you check this, there's a difference between this one and that former one. When we did Euro USD, there was, after the currency paid, there was no space for current market price. If you are doing the USD pair, like Euro USD, GBP USD, AUD USD, they don't ask you, you don't need to put in to insert your market correct price. You don't need to. But if you are trading other pair like Euro USD CAD, GBP JPY, Euro JPY, you have to put the market current price. So you go to the current market price where you want to enter is 1.32738, which is this. That is this is the price. You get it? This is the price. This is the price. Now, this is the price. We are entering at 1.32726, 1.32726, 1.32726, 1.32726. That's our entry price. You calculate. Now, if you don't put the current market price in pairs like this, you will not get the accurate lot you want to use. So that is why once the pair asks for current market price, if the platform is asking for that, make sure you add it. But I know it does not ask for Euro USD, AUD USD, GBP USD. It does not ask for the current market price. Now, the market is telling you that standard lots, of course, this is mini lot, micro lot, but what we are using is standard lot. So 0.021, which is 0.02. That is the lot size you are going to use in your Meta 4, Meta 5 to enter this trade in this particular position with your stop loss at this position. You are going to, so if you use anything more than 0.2, you'll be risking more than $5. If you put anything less than 0.2, you'll be risking less than $5. So now, what is the importance of getting to know this thing? This is one of the important. You already know what you are losing. You know that if I enter this trade and the market goes against me, I have $100. If I lose $5, I still have $95 left to trade, which is safer, which is you not putting all your eggs in one basket. It's safer. Yes, I know many times we want to make all the money in Forex in one day. Sometimes because of some of the videos we watch online that said, I make $1,000 with $10 in one day. Yes, it's possible, but it's not wise. Because now when somebody is saying that I make $1,000 with $100 in one day, the person will not tell you the number of times he has lost $100 in one trade. You know, people always post their success without posting their failure. So that is why you don't just listen to such kind of thing and just go with it. Yes, there were times where that's risking $100. Yeah, you have $100 account, you're risking the same $100 in one trade. There are times where that trade will go against you. Sometimes you can do it for 10 times and 9 will go against you, 8 will go against you, 4 will go against you. But we are not in this business to make money in one day. Forex is an investment. It's an investment, something that you should think the future. It should not be something that you just, no, if you want to see it as a business, just like a farmer. If a farmer plants a seed today, there are sometimes the farmer has to wait for months, for years, for that plant to germinate and grow before it starts producing food. So that waiting time, it also applies in Forex because it's a business. But if you approach it with the mindset of you want to make money, you will not make the money. Even if you make the money, you will not be consistent. You will make the money today, you lose ×2 tomorrow. So that is why we should, if you are risking $5 in a trade, so, and you are trading 1:2. If you lose 5 trade and you win 5 trade, you are still in profit. If you lose 5 trade, if you lose 6 trade and win 4 trade, yes, you are still in profit, which is safer. So that is why I really want us to see Forex as a business, not just a get rich quick scheme. I've seen a lot of successful traders. If you ask those ones that have been there for years, they will tell you that they grew their wealth systematically, stage by stage. But the ones that made money overnight, many a times they don't stay long in the market. But I believe you want to stay long. All right, I don't want to. I believe this is one of the longest video I've made. One of the longest video. We don't always want our video to be long. We go straight to the point. You get it? But this is a very important aspect of Forex. It's like the most important, if not the most important, managing your money, money protection. Yeah, it's more important than profit making. It's far more important. Protecting your capital is far more important than profit making. Yes, we will make profit, but the longer we can stay in the market, the more opportunity we are bound to see, the more good opportunity. So that's why I say it's not being smart. It's not being smart that make a trader money. It's being smart enough to know that the market is smarter. That is what make a trader successfully. It's not over confidence that gives you the money. No, it is wisdom, understanding that the market is not your father's house. So let your own reason of coming to the market, let it be that you want to make money, but you want to make it systematically and consistently. All right, thank you very much. We always keep it short in our tutorial. We go straight to the point and we remove the noise. Please, if you have any question, let me know in the comment section. If you find today's video helpful, remember to leave a like and feel free to subscribe for tips in the future. Feel free to stick around for some of my other videos that you may be interested in. Thank you so much for watching. I'll see you in the next video. Bye.